Good morning everyone. In today's session we are going to see about income from salary. This is M. Sudandra Devi, Assistant Professor, PG and Research Department of Commerce, Shakti Kailash Women's College, Salem. In today's session we are going to cover the following topics: basis of charge, tax treatment for different forms of salaries, retirement benefits, allowances, perquisites, deduction under section 16. At last we are going to see how we are calculating salary. So what is basis of charge? Under what basis you are going to charge the head salary? So the salary will be charged under section 15 to section 17. In this, salary will be charged on receipt basis or due basis, whichever may be the earlier one. Bonus will be charged on receipt basis. If there is any arrear of salary, it will be coming effect from the date on which you are receiving the particular arrear of salary. If there is any other benefits, it will be charged to tax under this sections. Next, what is salary? Salary is the monetary benefit which is taken by the employee for his employer-employee relationship. Salary is inclusive of these items, that is wages, allowances, annuity or pension, fees, commission, perquisite or profit in lieu of salary, or any other benefits in lieu of salary, advance salary, leave salary, amount transferred to RPF, or any other benefit which is due to the employee for his relationship. Next is, what is the tax treatment for these forms of salaries? In that, first you are going to see what is advance salary. Advance salary is a salary which is received in advance. In such case, you will be taxing the advance salary on receipt basis for the assessment year which is relevant to the particular previous year. Next is arrear of salary. Arrear of salary will also be taxable on receipt basis. Bonus will also be taxable on receipt basis, but these two should not be taxed earlier. Next is leave salary. Leave salary is nothing but if you encash the leave by surrendering the leave standing to your credit. That is, for example, if you are having 12 casual leaves for 1 year, but you have taken only 2 leaves, if you are having remaining 8 leaves in your hands, then you can surrender such leaves to your employer and you can encash the amount for that leave. Next, leave salary if you are receiving at the time of your service. That is, you are continuing in the particular service, and if you are receiving leave salary means it is taxable. If you are receiving the leave salary at the time of retirement, it is subject to some limits. Next, if the legal heirs are receiving the leave salary for a deceased person, then it is fully exempted from tax. Now we will see what is the provisions considered for leave salary. So leave salary, as I said before, if you are in service, it is fully taxable. If you are not in the service, if you are getting at the time of retirement, then you have to see whether the employee is a government employee or non-government employee. If you are a government employee, it is fully exempted from tax. If you are a non-government employee, then you will be considering 4 limits for getting the exempted amount. Among the 4 limits, which limit is the lowest will be taken as your exempted amount. So what are the 4 limits? First is actual amount received. Second thing is rupees 3 lakhs. Third is average salary for 10 months. Fourth is cash equivalent for the unavailed leave. So all these 4 limits will be considered, and among all these 4 limits, which will be the lowest will be taken as your exempted amount. So what is salary? How we will calculate salary for this limits? So salary will be taken as basic pay plus DA plus commission. Next is gratuity. Gratuity is also a benefit which is received at the time of your retirement. Gratuity, for gratuity also you have to see whether the employee is a government employee or non-government employee. If you are a government employee, it is exempted from tax. If you are a non-government employee, you have to see whether the employee comes under the Gratuity Act or whether he does not comes under Gratuity Act. If a person comes under Gratuity Act, you have to consider the following 3 limits, that is amount received or rupees 10 lakhs, or 15 by 26 into average salary into completed year of salary, completed years of service. Average salary will be taken for your 10 months. In this case, you will be taking only 26 days salary. Okay, so all these three limits, which is the least, will be taken as your exempted amount. Next is, if you are not coming under Gratuity Act, you have to consider the amount received or rupees 10 lakhs or half month of your average salary into completed years of service. So among these three limits, which will be your least will be taken as your exempted amount. So you will be calculating gratuity exempted amount on the basis of these provisions. So taxable gratuity will be actual amount received for gratuity minus exempted amount will be your taxable gratuity. Next, pension. So pension, as you all know, pension will be the amount which is received at the time of retirement. Pension will be of two types, that is commuted and uncommuted. So what is commuted and what is uncommuted? Commuted is nothing but if a person receives the amount in lump sum, it is called as commuted. Uncommuted is a pension which is received periodically, that is called as uncommuted. So commuted pension, for uncommuted pension will be fully taxable for both government employee and non-government employee. But in case of commuted pension, if you are a government employee, it is fully exempted from tax. If you are a non-government employee, you have to take 100%, you have to calculate the 100% of your commuted value. In that, you have to see whether the person is receiving gratuity or not receiving gratuity. If a person is receiving gratuity, you have to take 1/3 of your commuted value as exempted amount. If you are not receiving gratuity, half of the commuted value will be taken as your exempted amount. Next, retrenchment compensation. Compensation received under industrial dispute or under any notification, rule or order. The following limits will be considered for exemption. Actual amount received or rupees 5 lakhs as amount specified by the government, or 15 by 26 into salary into every completed years of service. So among these three limits, which will be the least will be taken as your exempted amount. So far we have seen what are the considerations, what are the benefits which you will be receiving at the time of retirement. Next, we are going to see what is allowances. So allowances will be of three types, that is fully taxable, partially taxable and fully exempted from tax. First, you are going to see what are the fully taxable allowances. First one is dearness allowance. Dearness allowance is the allowance which is given by the employer to meet out the cost of living. This allowance will be fully taxable. In this allowance, the allowance may form a part of salary or it may not form a part of salary. Next, city compensatory allowance. This is also fully taxable. Lunch allowance, tiffin allowance, family allowance, deputation allowance, wardenship allowance, non-practicing allowance, project allowance, overtime allowance, fixed medical facility. All these things are fully taxable allowances. Next is partially taxable allowance. In partially taxable allowance, you are having two categories. That is, first category is allowances which are coming under section 10 and subsection 14. This allowance, first one is conveyance allowance, helper allowance, uniform allowance, academic allowance, travelling allowance and daily allowances. Next one is which has some limit. Next category is the allowances is having some limit to calculate the exempted amount. In that, first you are going to see children's education allowance. Children's education allowance is exempted up to rupees 100 per child for 1 month. You can get maximum exemption for 2 children. Next is hostel expenditure allowance. This is exempted up to rupees 300 for one child for 1 month, you can get exemption for 2 children. Transport allowance is exempted up to rupees 800 per month. If you are a handicapped employee, you will be getting 3200 per month. Tribal area allowance will be rupees 200 per month. Next one is house rent allowance. So for calculation of house rent allowance, that is for calculation of exempted amount in house rent allowance, you will be taking 3 limits. That is, first one is actual amount received, that is actual allowance which you are received. Next one is rent paid minus 10% of your salary, or that is, or 50% of the salary in case if you are residing, if the employee is residing in Delhi, Bombay, Calcutta or Chennai. So in these 4 places, if you are residing, you will be getting 50% of the salary as your limit. 40% of salary will be considered for other places. So all these 3 limits will be considered, and least from all these 3 limits will be taken as your exempted amount. So how will you calculate house rent allowance? House rent allowance, that is taxable house rent allowance. Taxable house rent allowance will be actual house rent allowance minus exempted amount will be your taxable house rent allowance. Next is entertainment allowance. Entertainment allowance is allowance which is given for entertainment, but in this case you have to take fully the entertainment allowance while calculating the gross salary. After that, only at the time of deduction under section 16, this exempted limits have to be considered. So what are the exempted limits? So first is you have to take actual amount received, or 20% of your basic pay, or 5,000 per month. So among these 3 limits, which is the least will be taken as your exempted amount. Next is fully exempted allowances. So fully exempted allowance are foreign allowance only in case of government employee who is working outside India. House rent allowance given to the judges of High Court or Supreme Court. Sumptuary allowances given to judges of High Court or Supreme Court. Allowances from UNO. Next is perquisites. Perquisites is nothing but it is additional benefit which is given to the employee by the employer. So perquisites will be of 3 categories, that is taxable for all. For all means whether he is a specified or unspecified employee. Taxable only for specified employee. Exempted for all, whether he is a specified or unspecified. So for this you have to know who is specified and who is unspecified employee. So what is specified? Specified employee means the following categories will be coming under specified employee, that is the director, whether he may be a full-time or part-time director, but he must have 20% of the paid up capital. Employee whose monetary salary is more than rupees 5 lakhs, then he will also be called as a specified employee. And unspecified employee is nothing but the employees who does not comes under the above category will be called as unspecified employee. Next is, or the first perquisite is rent-free accommodation. Rent-free accommodation will be calculated on 2 bases, that is whether it is a furnished and unfurnished accommodation. So furnished accommodation and unfurnished accommodation are the 2 categories for rent-free accommodation. First of all, what is rent-free accommodation? Rent-free accommodation is the accommodation which is given by the employer to the employee at free of cost. It is called as rent-free accommodation. First, while calculating rent-free accommodation, you have to calculate the value of rent unfurnished accommodation. So in this case, you will be taking whether he is a government employee or non-government employee. If he is a government employee, you will be taking only the license fees for calculating the rent-free accommodation, that is unfurnished rent-free accommodation, for calculating the value of unfurnished rent-free accommodation. If you want to calculate the value of furnished accommodation, you will be adding, along with the license fees, you will be adding the 10% of the original cost of furnitures which is provided by the employer or the higher charges which is paid by the employer. Next, if you are a non-government employee, you will be considering the following things. That is, you will be taking the population into consideration. In the non-government employees, if the employer is having his own accommodation, then you will be taking this provisions. That is, if the population is up to 10 lakhs, you will be taking 7.5 percentage of your salary. If it is 10 lakhs to 20 lakhs, then 10 percentage of your salary will be taken as the value of unfurnished accommodation. If the population exceeds 20 lakhs, 15 percentage of the salary will be taken as the value of unfurnished accommodation. But if the accommodation is not owned by the employer, but it is hired by the employer, means you will be taking only whatever may be the population, you will be taking only the 15 percentage of your salary as the value of unfurnished accommodation. 15 percentage of salary or the higher charges, whichever is low, will be taken as the value of unfurnished accommodation. So if you have calculated a value of unfurnished accommodation, next you have to calculate the value of furnished accommodation. So as like the government employees, value of furnished accommodation will be calculated by adding the 10 percentage of the cost of furniture or higher charges, whichever is provided by the employer. Next, if the accommodation is provided in a hotel, then 24 percentage of the salary will be taken to calculate the value of accommodation. Next, as I said before, for furnished accommodation, how you are going to calculate. Next, what are the obligations for the or the perquisites which is made by the employer for on behalf of employee. So what are the perquisites means which will be taxable, that is life insurance premium, income tax, professional tax, gas, electricity, water supply, domestic servant, reimbursement of school fees, medical bills, club bills, telephone bills, all these things will be paid on behalf of the employee by the employer, then it is taxable. Next, interest-free loan. Interest-free loan is given, provided by the employer to the employee. Then the employee have to pay tax for the percentage of interest which is paid for the same loan which is provided by the SBI for the same loan. That interest percentage has to be paid as the tax for the government. If the loan is given by the employer to the employee at the rate which is less than the interest rate, then you have to take the rate which is specified by the SBI. If nothing will be taxable if the amount is less than rupees 20,000. Interest free loan, if it is given for the medical treatment of the employee or his family, it is not chargeable to tax. Next is what is a tax which is provided for movable assets. If you are using laptop or computers, then there will be no tax. If you are using other than this, other assets are used by the employee, then 10% of your actual value will be considered as your tax. Next is transfer of movable assets. If the movable assets are used by the employer, is sold by the employee, is chargeable to tax. Its taxable value will be original cost minus depreciation. If free holiday home facility is availed by the employee, he will be taxable to the extent of the cost of the employer. Free lunch. Free meals is provided during the working hours or the remote area is not taxable. Free meals provided by the employer in the office premises during the working hours are taxable to the value of rupees 50. The value of tea snacks provided by the employer will not be taxable. The aggregate value of the gift which is provided by the employer exceeds 5,000, then it will be taxable. Next is traveling and touring. taxable value will be the amount received from the employee. The value of the taxable value for traveling expenses will be the actual value of expenditure minus amount received from employee will be the taxable value. Credit card facility. Credit card facility is paid by the employer. Then you have to calculate the full value, and the full value will be taxable in the hands of the employee. Club facilities. If the membership fees or club expenses of the employee is met by the employer, it will be full taxable. Health club, sports club facilities provided uniformly to all the employees by the employer at the employer's premises will be exempted from tax. If the benefits are enjoyed under corporate membership, it is fully exempted. Taxable for specified employees only. Domestic servants, gardeners, sweepers, watchmen, cook are fully taxable. If any value is collected from employee, that has to be deducted and remaining amount will be taxable. Education facility. If the education facility is provided by the employer to the employee, then cost of education minus ₹1,000 per child and amount recovered from the employees have to be deducted and remaining amount will be taxable. If it is provided for the other members of the family, then you have to deduct the amount recovered from the employee and the remaining amount will be taxable. Free gas, electricity, water facility is given to the employee, then the amount will be calculated as whether it is provided by the internal source or external source. If the facility is provided through internal source, then manufacturing cost minus amount received from the employee will be deducted and remaining amount will be taxable. If it is provided from the external source, amount paid by the employer and less amount recovered from the employee, remaining amount will be taxable. Next is medical facilities. Medical facilities are exempted under deduction section 80C. So 80C will be taken in the last day of this course. So medical facility, the following medical facilities will be exempted. That is, if the medical treatment is given in the government hospital, if the treatment is given in the hospital which is owned by the employer, or if the hospital is coming under the approval of Chief Commissioner of Income Tax, claim paid by the employer, group medical insurance premium paid by the employer, medical treatment in private hospitals exempted up to ₹50,000, medical facility outside. So these are all the facilities which are exempted, which is inside India. For the outside, if you are getting medical facility outside India, the following will be exempted. Medical expenses and staying expenses will be exempted. Traveling expenses will also be exempted. Employees, spouse and children. So these expenses will be exempted only for the employees, children and spouse and the persons who are dependent on the employee. Next is leave travel allowance. So leave travel allowance will be provided for aeroplanes if you are traveling in airways and through roadways and train. So whatever may be the mode of transport, you will be provided leave travel allowance. So leave travel allowance will be received by an employee, will be exempted up to the extent of the amount granted by the employer minus expenses incurred by the employee. Next, the exemption will be available only for 2 journeys in the combination of 4 calendar years. But if the travel goes beyond 2 journeys in the block of 4 calendar years, then the journeys can be taken to the next block. Next is valuation of motor car. If the motor car is used by the employee, which is provided by the employer. So motor car can be owned by the employer or it can also be hired by the employer. So in this case, if you are using for official purpose, what will be the treatment? If you are using for personal purpose, what will be the treatment? And if you are using partially for official and partially for personal, what will be your treatment will be seen in this thing. When car is owned or hired by the employer, when the car is owned or hired by the employer, if your uh, exclusively it is for official use, then the taxable amount will be nil. If you are using exclusively for personal use, you have to add the actual running cost plus the actual driver's expense plus the depreciation of the car. So by adding all these things, you have to pay the total amount of all these things as tax to the government by the employee. Next, when the car is owned or hired by the employer, and if it is used for partially for official and partially for private purpose, the following liters used will be considered, and the following amounts which is given in the table will be taken as the exempted amount. If the other convenience is owned by the employee but the expenses are met by the employer, then the actual expenditure incurred by the employer will be exempted up to rupees 900 per month. Next, so far we have seen what are the allowances, what are the benefits which is received at the time of retirement, and what are the perquisites. So now we are going to see what are the deductions. So by adding all these allowances, retirement benefits and perquisites, you will be receiving gross salary. In the from that gross salary, you have to deduct the following deductions. These deductions will be coming under section 16. So first deduction is there will be a standard deduction of rupees 40,000 or the actual salary, whichever is low, will be taken as your standard deduction. Next is entertainment allowance exemption. So as I said already, the exemption amount of the entertainment allowance should not be deducted before. It should be deducted only in deduction under section 16. So as already we have seen the limits. So once again I will memorize the limits. That is, first is you have to take the actual amount of allowance, or rupees 5,000 per month, or 20% of the basic pay will be the three limits for the exemption, and among these three limits, which is the least, will be taken as your exempted amount. Next, deduction under section 16 will be professional tax. This tax will be calculated for the persons who are in the professions. So up to 2,500 per month will be taken as the professional tax. Next is provident fund. Provident fund is the savings which is taken from the salary of the employee and which is also contributed by the employer, and it is paid only at the time of retirement benefit. That is called as provident fund. Provident fund is a deduction which is coming under section 80C. So this deduction will be seen in the last class, that is last day of the course. In this provident fund, there are three types of provident fund: recognized provident fund, unrecognized provident fund, statutory provident fund, and one more, public provident fund. So employees provident fund, if you are having a recognized provident fund, if the contribution to the provident fund exceeds 12%, then you have to pay tax for that. Next, if you are having interest on the provident fund and the interest is exceeding 9.5%, then you have to pay tax for the excess percentage of interest. So this is about recognized provident fund. Next, at last, we are going to see how we are going to compute the salary. Salary will be computed. First you have to first basic pay will be taken, then all the allowances will be taken. Next, all the retirement benefits, perquisites, all the things will be added, and you will be calculating the gross salary. From the gross salary you will be deducting the deductions under section 16, and after deducting the deductions you will be getting the taxable salary. So this is how you are going to calculate the taxable salary. So far in this session we have seen what are the important provisions which will be considered for calculation of salary, and for what are the perquisites and what are the deductions which you will be deducting from the salary. So this is how you will be calculating a taxable salary. So I thank one and all for your patience of listening to this course and to this session. Thank you one and all present here.